when it comes to economics, there are two big questions that we need to look at and answer, or that the field looks at that for. What, how, and for whom, and the the self-interest versus social interest is what people do for themselves, also best for society and businesses as well. So the first one of that is the two big questions. All right. So the first thing we need to look at is this idea of goods and services. And what does that mean? What is it? Well, basically, goods and services are things that businesses sell and people buy. Now, the goods part of it is physical things that you buy, things like food, clothing, housing, Starbucks, whatever it is. Those are the goods part. Now, the services side is actually things that are not physical that we buy. And so, for example, accounting preparation you pay for, getting dealt at blackjack, the getting a massage, all of this is services. So goods and services, that's the main thing of what we look at here. Now the first part of that, the what, how, and for whom, is the what. So what goods and services actually get produced? This is something that changes and varies both by country and over time. So the first thing we look at, the what part, is kind of by country. So what gets produced in the United States, and we'll look at this more in a second, is a majority of services. And so we have become a much, much more heavily services-driven economy. And now we are not very reliant on manufacturing and agriculture. Whereas some other countries, like Brazil and China, they do a lot more with agriculture and a lot more with manufacturing. Now, what gets produced also really varies over time. And so this graph here, it looks at the percentage of total jobs in the United States between 2000 and 2016. And it's from the Bureau of Labor Statistics. Now, the one thing that really should stand out is the decline of what are called goods-producing jobs. These are jobs that deal in manufacturing, construction, mining, logging. And between 2000 and 2016, it went from 19% all the way down to 14%. And a big reason for that is from the manufacturing. There's really two drivers behind that. Now, with the 2016 election, you hear a lot about outsourcing, and outsourcing absolutely has been an issue. The United States, relatively speaking, has high wages. We have minimum wage laws. We have OSHA, which requires employers to have certain standards, and when they do that, it costs money to do that. Now, for all these reasons, employing labor in the United States is a lot more expensive than other countries. So what ends up happening with these manufacturing jobs is that they get sent out, outsourced to these other countries because of the cheaper labor. And then the businesses, in their pursuit of trying to build their profits, they do it and then bring the goods back in to sell, and doing it at a cheaper cost. Another reason that doesn't get talked about enough is the idea of automation. Now, a lot of jobs that were once done by humans are now done by computers or machines. So an example of this is in a car making facility. And so if you've ever been to a car manufacturing facility, which I encourage if you ever have the opportunity, it's pretty fascinating. There's a mix of these jobs being done by people and being done by machines. And so it's a big assembly line, and as you go through, there's part where machines are doing some and people are doing the others, or people are running the machines, so forth. The big part of that, though, is that those machines are doing jobs that 50, 60, 70 years ago, people did. And so that's a pretty big issue because it takes jobs away. Now, on the other side of that, you still need people to invent and maintain and fix these machines. So it also creates jobs as a spillover of that. But the basic idea is still there. And technology has spilled over to other places like E-ZPass, taking away from toll collector jobs. But again, you still need people to monitor those and to control the systems and so forth. Things like ATMs, which you may have never thought of, ATMs do the jobs that bank tellers used to do. So there's a lot going on here, and it's a constantly evolving economy. So we went from 19% to 14%, but where exactly did these jobs go percent as an overall scale? Leisure and hospitality is one. So we have done a lot more as far as tourism in this country. If you've been to a lot of tourist places within the country, you'll see both people from in the country as well as outside the country coming in. And so a lot of these places have adopted kind of the tourism idea to try to bring money in, either to their state or into the country as a whole. So there's been growth there. Another area where there's been a lot of growth, and this is the biggest one, is in the education and health services sector. Now, this is a little bit misleading. Now, there have been some jobs in education because more and more people have been going to college, but a majority of this growth has been in the health services, the doctors, the nurses, ambulatory care, so forth. Now, a lot of this has been going on since the passage of the Affordable Care Act, but even past that point, or even before that point, there was still a ton of growth there. And the reason why is that with insurance, it was, without getting too much into it, it was set up to where people end up paying, over time, people paid less and less out of pocket for their healthcare services if they had insurance. And so basically more people have been going to the doctors. And because of that, demand rises. And so the doctors, the hospitals, they charge more. And it's just kind of a cycle that goes on. But regardless, there's been more demand for these services. And so the healthcare has been the largest grower pretty much consistently since 2000. So as you can see, there's been a lot of change over time. So that's the what part, what gets produced. The second part is how do we produce those goods and services? Now, technology plays a big role in that. So technology can determine what we produce because of the ability of being able to produce it, and also what are the ways that we produce it of machines versus people, and depending on how good the technology is, how much can we produce of it? Now, to produce a good, you need what are called factors of production. These are things that are needed to bring together, to put together, and get that output, that product, completely out there. So there's four of them. The first one is land. Land is, it's called the gifts of the earth. And it's basically land out there. It's where buildings go. It's where crops get grown. So, if you want to have a business and you want to sell something, you need to have your building somewhere, and that's where it is. The next one is labor. Labor is the human aspect. It's the people who are taking whatever input you have and putting it together and putting it out there. So, for example, to make a pizza, you need people to roll the dough, you need to put the sauce on, put it in the oven, and so forth. Now, when it comes to labor, human capital plays a big role. Now, human capital is really a measure of our ability to produce the goods and services. It is, how productive are we? And that really changes over time. As time has gone on, our human capital has increased. We are able to produce more and more. And if we look over here, you can see that one of the reasons why our human capital has really been advancing is because more and more people are getting advanced education. So between 1903 and 2013, you can see that the percentage of the population who was getting 4 years or more college has dramatically risen. Same with being high school graduates, whereas people who only had some high school and less than 5 years has been getting smaller and smaller. So we're getting more formal education, which allows us to work better, to work more productively. Another reason why we have seen the increasing of human capital is because of technology. And so with technology combined with our kind of general knowledge, our on-the-job training, it has really allowed us to go forth and be able to produce more. Accountants, for example, can put out 10 tax forms in the time it took them to do one, because before it all has to be on pen and paper, whereas now it may only have to be a computer, you type everything in, spits it out, you're good. So that's the second factor of production. And the third one is capital. Now, for the most part, capital is physical. It's the machines that we use to produce our goods and services. So with the pizza example again, your capital is going to be your oven. It's going to be your cash register to ring the people up. It's going to be your, if you have any other machines, a deep fryer there, so forth. Now, there's also financial capital, which is money people get to actually buy the physical capital. So capital is the third one. And then the fourth one is entrepreneurship. Entrepreneurship is the entity that brings it all together. So you may have these three, but you still need someone to come together, an entrepreneur, to organize it so that those other three can produce those goods and services. So those are the four factors of production. Now the third part is the what, how, and for whom is who gets those goods and services, right? Who gets to consume those goods and services to get to produce? Now what does it all come down to? It all comes down to the money, right? You need money to buy things. And so we talked about the idea of scarce resources, part of it is money. Well, you need to actually get that money. So who gets the goods and services to get produced? Well, it depends on how much money you earn. That's going to come from those factors of production. So the land that we talked about, if you own it, you receive rent for it, for someone using it. If you labor, this is how most people get their money, is from wages. You get paid for doing work. If you own any of the capital that we talked about, you get interest on it, either the physical or the financial. And finally, if you're an entrepreneur, you get that profit. So that's the one question, the what, how, and for whom. The second one is this idea of self-interest versus social interest. So people and also businesses, they make those decisions that result in the what, how, and for whom that we talked about. Now, is it in their own self-interest, both the people side and the business side? Yeah, I'm sure it is. It's at least for a majority, that's why people make decisions. But is it what's best for society? Not necessarily. And it also comes down to efficient. Are we producing the right amount that benefits society, which is both the people who buy the goods and the people who sell the goods? A lot of times it's not the case. And so one example is with pollution. And so if you want a nice car, you go out, you buy it, right? You did it for you. The businesses, they sold it to make money, so they did it for them. The problem is when a lot of cars are sold, that puts a lot of pollution in the air. And so, everyone might have 2 cars per family, whereas you may only need 1. The problem is that with the pollution, it may be bad for society as a whole for health reasons. So it's really just kind of a way to look at that. Is the self-interest promote social interest? Not necessarily.